Today we're making a video on USA All-Star Liberty Funds. USA ticker symbol. It pays a 10% dividend, and it's at a 1% premium to its NAV. As you can see here, premium discount 0.8. So anytime a fund is around its NAV price of 626, whatever it is, so USA happens to be 626, the premium discount 0.8. So it's not far from its true inherent value. So if the NAV is 626 and the market price is 631, this is a good time to add, especially when the market showed weakness today. The market was down, as you can see up top, 1%. Dow down 1.26, NASDAQ down 1.7, S&P down 1.3. We were down, as you can see here, 1.12. So we actually beat the indexes. Yes, we lost $7,000 today, which would seem like jarring and a bit depressing, but it's not at all when you're playing with scale like we are, 400,000 plus the margin of 200,000 that we keep on, which is the whole key and the secret to getting ahead in life. See this 200 grand margin we keep at the bottom. We use this purchasing power that everyone gets in a brokerage account. Anytime you start a brokerage account, they grant you this margin purchasing power automatically. They grant you 4 times your purchasing power. So if you have $1, they give you $4. Why are they giving me 6 on 400,000? Because usually they give me 1.6 million, but I've invested all this in all these funds. I have hundreds of thousands invested, particularly in the Cornerstone funds. Check those out on our channel. Go look at our wall. We've done videos on Cornerstone, 20% dividends, Gulf, 13% dividends, and now we're doing USA, which has a 10% dividend. Let's go into the chart and check out USA. It pretty much resembles the S&P 500. If you saw on their description on their website, they showed you they have 40% growth, 60% value. So it's a pretty balanced fund, and it's cheap, just like the S&P 500 is cheap. USA was formerly trading at $9. Now it's at $6. So if we go in there and we do a percentage test from 6 to 9, that's 50% upside that we have potentially. Plus you have a 10% dividend. So this is something that we're really drawn to, a fund like this that's this cheap, and has this big of a dividend, 10%, and it matches the indexes, and it's 50% off the highs. So we always want index exposure, and that's how we're getting our performance and value. The S&P, as you can see, is up about 5% for the year. Let's see here. It shows S&P is up 6.8. The NASDAQ's up 13%, but we're up 26%. Why is that? Because we're tied to the indexes, just like the S&P. We're tied to the S&P, but we use the leverage of our margin, which I showed you already, which is about 200,000. So we use the 200,000 at a 5% interest rate. So they charge you 5% here for margin. Some places they charge 10, but between 5 and 10%, which is better than a credit card and better than a lot of real estate mortgage loans. So they give us 97,000 in dividends per year. Our holdings here, USA being one of them. USA, it pays us $269 per quarter. So, it doesn't seem like a lot, but when you add all these up together, it comes out to about 8,000 to 9,000 a month. So 2,800, 2,700, these are the Cornerstone funds. Again, look those up on our wall. Those are 4-star funds on Morningstar. And then all these other guys just add up and they pay you a considerable amount of money per month. When you do the Morningstar test for USA, you'll see it's a 3-star fund. And you'll see that over the course of, let's say, 10 years from 2013, $10,000, as it shows here, made you $45,000. So that's really strong. I mean, it doubled your money and then some. You got a 200% return on your investment from 10 to 20, 20 to 40. So over 200% on your investment. That's in line with the S&P. If you go compare it to the S&P 500, you'll see that USA made about the same amount. SPY is a 4-star fund, but look, it made 40,000. USA actually beat it and made 45,000 in the same time span. So this is why we're liking USA. This is why we're adding on the dip today. We also wanted to pay for the position. So when we bought 500 of USA, it added our margin debt. It added to our margin debt. Added $500 to our margin debt. So what we did was we sold short CLM today. This is, you can go ahead and click out of the video if you've already gotten what you needed. USA top quality fund, buy it, 10% dividend, forget about it. It has 50% upside, so you can make potentially 60%, 10% dividend, 50% upside if it returns back to its old highs. If the market goes to the old highs, USA will too. And you can go ahead and tune out here. But if you want an interesting tidbit on how to raise equity, which is this available withdrawal number here, and learn a trick with it, I'll show you one. So CLM, and we mitigated our risk by doing this. So the market's had a big run as you've seen. The market's up 6%. Our portfolio is up 27%. We want to mitigate risk while we're still bullish and we think the market is going higher. We sold short CLM today, which gave us $1,000. So when we sold it short, it knocked down our margin by $1,000. But even more cool, what's even more cool than that is that it boxed one of our positions in Cornerstone to make its maintenance only 5%. So when you look here at Cornerstone, you see here boxed. Okay, boxed. It's a term most have never heard of. It made my available for withdrawal, it made my equity maintenance go from 30% to 5%. So instead of having 300, if I put $1,000 on Cornerstone, $300 would be taken up for equity maintenance, which is 30%. But if I box it, then only 5% is taken up. So out of the whole $1,000, only 5% is taken up. So $50. So I get the whole 95% of my equity to play with in the process, and that adds to this bottom line, this purchasing power here. It made my available withdrawal increase by $250 roughly, because 30% minus 5% is 25%, and it made our purchasing power go up some. So it wasn't like an incredible amount of money it gave us, but it did lower our margin interest by taking our debt down from 210 to 209, and it boxed our position, so it raised equity off of that maintenance trick I just showed you. And it mitigates risk because the market has had a run. Again, to start the year, we've had a pretty decent run. And yes, it's pulling back and everything is looking constructive. I'll show you a chart of UPRO, which is the S&P 500. But it's a ×3, a triple. So you can see here that the market, it looks just like USA, by the way. This chart looks just like USA. The market's had a pullback, but we're holding this brown line, this 20-day moving average. So everything's looking constructive. The market wants to work higher. We're down over 30% from the highs on the NASDAQ, S&P almost in 2022. So everything's looking constructive, but we still wanted to mitigate risk some. This is a nice basing pattern. Look at how we're getting over the orange line, the 200-day moving average. We're getting above it here. Every time it hits the line, it fails. See, it hit the 200, it failed. Hit the 200, failed. We made tons of videos on our channel about this. Now we're above the 200 again, but it looks like this could be different as we're making higher highs and higher lows, and inflation's coming down. The economy is still staying strong. Jobs are still strong. So everything's looking like all systems are go. And so we're staying long. We bought USA to prove that we're bullish. But again, we wanted to lower our margin and mitigate risk some. So we sold some shares short of CLM. And, I just wanted to say we made a video yesterday on Devon. We bought this oil play that has a 6% dividend. We're out here in Midland, Texas, doing some research on oil and gas. I'm here for a wedding, but we're also doing some research in the process. And so I wanted to pay for my trip. So CLM also, when I shorted CLM here, it actually paid for my trip. So, it gives me spending money while I'm here on my trip. So, because I like to keep my margin under 210. If it goes over 210, then my margin interest starts going up, and I don't want to have to pay, 5% interest isn't much, but when this number goes up, and it goes up to, let's say, even 230 or 300,000, now it's starting to get out of control, and you can't manage your margin payments, your interest payments. So I'm trying to keep my interest payments in check while at the same time paying for my trip and paying for this purchase of USA that we just did because we believe in it. And that's the little, and then in the process, it boxes your position and raises equity, as I just showed you, by selling short CLM. Because when you own CLM, when you short it and you own it at the same time, they look at that as you're mitigating your risk properly. And so they box that position and they raise your equity as a result. So I hope you like that little trick. I hope you agree that USA is a good fund, all-star fund, that you should be buying on the weakness, any weakness in the market. It has an attractive dividend. It pays to own it, even if you're in margin. 5% you're getting charged margin, 10% you're making on USA. So you're getting making a 5% profit just by owning it on margin. So today was a buying opportunity. We saw a sale. We don't freak out when the market's down. As long as we're in line with the market, we don't freak out, and we just use today's opportunity to add to shares and increase our monthly income even further. So, which is again is about 97,000 per year we make, and that's about 8,000 to 9,000 a month. I don't know if I showed it to you already at the beginning of the video, but here it is, 97,000 in dividends we make, paid monthly. So anyway, and that pays out our margin. By the end of the year, our margin will go from 200 to 100 because this is about 100 that we make. So, and then our account will go from 400 to 500. And then you just do this, every year you just scale up your earnings and you slowly become financially free. So hope you enjoy the video. Take care. Talk to you soon.